Hello, today we are solving October 2022 IAL Unit 2 question number 3. Okay, question number 3A, Part 2, Cash flow from the operating activities sections of the statement of cash flow in accordance with IAS 7. Okay, this is what we are supposed to prepare, the statement of cash flow. Okay, the statement of cash flow as on 30th. Okay, as on 30th September 2022. Now we know that, okay, we know that how is a cash flow prepared. You are supposed to take profit after interest. Okay, profit after the interest you will take, and then after that you will you can add or subtract, okay, things that's related to property, plant and equipment. Okay, so I will have to include whatever has transactions has happened with regard to property, plant and equipment. For example, I will have to add its depreciation. Okay, depreciation cost. Okay, depreciation cost that has occurred, we had already prepared here. So what was the depreciation that was transferred, that I will add it here. Okay, the depreciation for this year, and then I will have to subtract, okay, less any profit on sale of assets, of non-current assets. Okay, and I will have to add any loss. If there is a loss, what happens if there is a loss? I will have to add back this one. Okay, add back the loss on this to the profit. Now after this I will be able to get, okay, I will be able to get operating cash flow. Okay, operating cash flow. When I do this, I will get operating cash flow before any working capital changes. Okay, I will get this. So what am I doing? I am trying to understand, okay, I am trying to include whatever the cash inflow and outflow that has happened. So I have taken the profit. From the profit, okay, whatever the depreciation, okay, cost for this year, which you will have to subtract, okay, I will add back those. I will also less the profit, okay, whatever the profit I got from the sale of non-current assets, I will remove that from the profit. I will also add any losses incurred, okay, back to this profit, and I will take that value that represents the operating cash flow before any working capital changes happens. Then, okay, then I will see what has happened to the working capital, okay, with regards to inventory, trade receivables and payables. Okay, so any increase, okay, or decrease in inventory I have to account here. So first one, okay, if I see there is an increase in inventory, we can see that the inventory has increased. So any increase in inventory I will have to subtract, okay, I will have to subtract less any increase in inventory. Okay, and these two act in inverse correlation. Then trade receivables, okay, what happens to the trade receivables? Here I can see that there is a decrease. So if there is a decrease in the trade receivables, I will have to decrease, okay, any decrease in trade receivables I will have to add back. Okay, so if there is an increase in inventory, I will have to subtract, and a decrease in trade receivables, decrease in trade receivables, okay, I will have to add. See, this inventory and trade receivables you remember as inverse correlation. Any increase, Okay, any increase in inventory. Increase means I will have to subtract. Okay, I will have to lessen that. And any decrease in trade receivables I will have to add back. Now, and what happens with regard to trade payables? They will have a direct correlation. So we can see that there is a decrease in trade payables. So decrease in trade payables, which means I will have to less. Okay, any decrease. Okay, this is a direct correlation with regards to trade payables. Any decrease I will have to lessen. So then I will get, okay, after this I will get the cash generated from operating activities. Okay, cash generated from operating activities. After this, okay, I will have to again, okay, subtract the any interest paid. Okay, I will have to subtract back any interest paid, less interest paid, and I will have to also subtract any tax paid. So then I will get the net cash from operating activities. Okay, this is how you will do you will have to prepare the cash flow from the operating activity. Statement of the cash flow, you will have to calculate what was the net cash flow from the operating activities. Now, profit after the interest is taken. Okay, we already know they have given the profit after the interest for the year ended was 412,000. Okay, here. So that was 412,000, but they also have taken out a loan here. Okay, there is an overdraft interest and there is a loan that was taken out later. This has not been included. Okay, this has not included the interest, so we have to add back those interest also to get the total. So now the interest on the bank overdraft we have to add back. So that was equal to 11,000 pounds. So to this add, okay, the interest on the bank overdraft. So then you will also add back this interest which was taken out for the another loan on 1st April. So from the 1st April, okay, from the 1st April to September, from 1st April to 30th September, which we are seeing, it is equal to 6 months. Okay, April, May, June, July, August, September. Okay, that is 6 months. Okay, for the 6 months they have to do the interest payments. So let's add the interest on the bank loan taken out. Okay, we will have to add back the interest, that also you will have to add. So add interest on the bank loan that was taken out on 1st April 2022. So you will have to include all the interest. So we have the profit after the interest. So you will take only the profit after the interest, okay, which is they have given, and additional interest that was not accounted you will have to include. Now to calculate this, you have to see that 500,000 pounds. Okay, let's calculate that interest. What is the interest payment at the rate of 10%? Okay, 10%, and this I have done it only for 6 months, not for the entire year. So that value is going to be equal to, so 50,000. Okay, 500,000, 10% is 50,000. Okay, divided by 2, that is equal to 25,000. Okay, 25,000 pounds is the interest payment for this bank loan for the 6 months. Okay, now we have to add up all these values. Okay, we have to add up all these values. So let's add this profit, okay, after the interest. Now this is going to get me profit after the interest. Because these transactions have not taken place on 30th April, you have realized that these things have happened. So it will be equal to 448, okay, 448. So that is going to be equal to so that is equal to 6 plus 2 8 and here 4, so 448,000. Now this is the value for the profit, okay, this is the value for the profit after interest from which you will start, okay. So that is 448,000.